In what could be a win for Wall Street, the Federal Reserve is set to announce this week that it will look to public input on how it should regulate big banks for hoarding, selling, and trading physical commodities instead of using its own authority to decide on regulations. This move could fly in the face of years of Fed warnings that Wall Street's expansion into metals and energy could actually put the U.S. economy at risk from alleged volatile market practices. Now, Zach, break it down for me because I don't quite understand this. What's at stake here?
This is a huge, huge test for Janet Yellen, that she's getting right, inheriting right as she steps in the door as the new Fed chair. Essentially, for decades, going back, before the New Deal reforms to the financial system, there's been a basic principle that banks do banking and other types of companies do other types of industry. It's more efficient and better for the economy if banks just stick to taking deposits and making loans, and other companies stick to doing the mining, warehousing gold, making sure that aluminum cans are manufactured, selling soda and beer, things like that. But what's happened steadily over the last couple of decades is that rules and regulations that involve that sharp line between banking and commerce have slowly been eroded. And now you actually have seen over the last couple of years, banks get deeply involved in the physical commodities business, which is a problem because they also are involved in a lot of derivatives businesses, financial futures and contracts and speculative bets tied to those very commodities. So people have complained, beer brewers, soda manufacturers, that banks have been manipulating the supply of these physical commodities in order to make big bets in the derivatives markets and make a lot of money from them. Now, banks have, of course, denied this, but the easy way to deal with this, to end this controversy, is just to force banks out of that business, which they were not allowed to participate in at all for decades and decades and decades. And you actually see a lot of traditional businesses, big, not do-gooder liberal groups, but like, Anheuser-Busch, big corporations saying, this is a problem. They want to see something changed here. But the Fed is very responsive to the banking industry, and so here they're basically saying, instead of taking a hard line, issuing a rule, cleaning up this mess, we're gonna take a period here where we're gonna accept public comment. Public comment basically means the banking industry continuing to lobby the Fed to do whatever they want, and the Fed usually just does whatever the banking industry wants.